everyone, welcome back to the rationalinvestor.com's daily brief. Happy Monday morning. I suppose actually did a good like two and a half hour broiler chickens episode yesterday. So actually I was pretty pleased with the content, listening back to what I was barking about yesterday. Well, on balance, I think it was pretty good information. I can definitely see there's the tension in the air is rising, no doubt about it. I wasn't too active on the site because this morning, because coming into tax filing deadlines here, May 1st, and actually I think it was supposed to be yesterday, so I was a little bit busy, preoccupied with that stuff. And of course, outstanding tax bills have to be paid, all that kind of fun stuff. And from what I understand, it kind of looks like the market's a bit muted here this morning. I think the big news over the weekend, obviously, First Republic Bank seized and sold to JP Morgan Chase. Nice and convenient. As I was suggesting to Chris, I think probably what's going to end up happening here, and it just makes sense, it's part of the 1%'s plan. Keep in mind that in the I think it was like 1910, at that point, Rothschilds owned 20% of JP Morgan. And it was kind of interesting on JP Morgan's death, and actually revealed his estate, his net worth. It was then revealed that indeed he sold a 20% stake in his bank to Rothschilds. And actually, interestingly, Vanderbilt himself even made a reference that he was actually surprised that Mr. Morgan was as poor as he was on his death. He thought he was a much more wealthy man. But have you ever seen J.P. Morgan's nose? That's a gentleman who enjoyed his bottle. You can always tell people who are alcoholics by the way their nose looks. It's always just, I don't know what happens to the human face, but people that drink alike, they have challenging noses. Anyway, so that's your news of the day. As I said, I've been a little bit out of it here this morning, and also too, we've got a couple really big, ugly events coming up here shortly, and I can sort of see. I don't know. We seem to have somebody on the site that is demanding, if they're going to take the education program, that they have 10 years of audited track record. I can tell you right now, we're not going to be giving out audited statements. If we were running a mutual fund, or some sort of hedge fund or something like that for you to invest in, absolutely makes perfect sense. For this education program, I don't think we are obligated to keep 10-year audited track record of performance. Hey, if we happen to have it handy, then yeah, it would be a great selling feature, but we haven't really invested in it. I mean, probably my greatest audited track record, and really I don't like to lose money, so if anything I just tread water. But when we do have opportunities to make money, I mean, hell, this place, this was done on Trex. I mean, good luck getting your audited track record from Trex these days. And we have been planning on winding up, but so I mean, this is just a simple model, but I mean, it's not like we're lying. It's pretty straightforward. In fact, we actually did this through the Coinigy people, and we have a video record, basically the entire process going through this. But if anybody is asking specifically for audited statements proving our performance, we don't have that available. It's just that simple. But that doesn't really change the process that we're trying to teach. And the process is actually universal. It's really not. I mean, the irony of it all is we're not actually even reinventing the wheel with a lot of what we do. We're just teaching you how to build a small business of trading and hold yourself to account. Things like journaling, logging, having a trading plan, what should be in your trading plan, what are setups, how do you build a setup, what are some key components, all that kind of stuff. So, and we certainly do not guarantee performance of anybody. If anything, we say this trading game is very difficult. Go slowly, understand the 4-year cycles, and understand that when everybody else is getting excited and optimistic, you're probably going to find TRI is telling you to cool your jets and just back off and slow down. So anyway, it's an interesting commentary that when we do get into these challenging market states, and I would imagine there's probably a lot of people that are underwater. They bought crypto into that last cycle peak, or maybe they bought the stock market and stuff, and things just aren't going that well. And then, of course, we have this just insane sort of fervor of almost anti-capitalism right now in a weird sort of way in the market. That I can imagine people are going to be very, very stressed. And then also, too, like we pointed out yesterday, we've got this big celestial event, and I understand explicitly we humans get really messed up around these lunar eclipses. So I can completely understand people are going to be very, very stressed right now. So take a deep breath. I mean, if you have to pay your taxes, pay your taxes. You don't want to be fighting with the tax man. It doesn't work. We always lose. So just, be a good citizen and do what you're supposed to do. And then when it comes to the market, if anything, I'm a little concerned that a lot of people almost kind of assume that we're getting ready for a new bull market and rah, 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 away we go. And I'm a little worried that I think I've shown you repeatedly, and actually this blog that we have is just absolutely awesome. But the blog, and I've shown you guys this repeatedly, so I don't think there is anything new that I'm saying here at all. But my anticipation for this year is we're going to look something like this. So don't be surprised if we got to maybe explore against the bottom ends of ranges here going forward. I do like the idea that 23 is an accumulation year, and I will be buying the dips, but that's just what I do with my money. I will never, ever tell you what to do with your money. That is entirely up to you and your trading plan. And, half of the reason why we built the education program is to help you build that plan. So, as I said, you can see right across the board, First Republic, First Republic. It's all over the place. First Republic, First Republic. I mean, this is basically dominating the news headlines. I did see it's interesting that there is, of course, it's fascinating. And I don't know, is this guy the devil or something? I'm not quite sure. But King Charles is going to be coronated on the lunar eclipse day. Uh-oh. I don't know whether that's a good sign or not. And I did see it interesting that they did a poll in Canada, and technically Charlie is technically Canada's sovereign and the leader of the country. If you say a bad word about him 100 years ago, he could chop your head off just like that if he felt like it. Well, maybe 200 years ago. But I do find it interesting. Of all days for him to be coronated on the lunar eclipse, that's freaky. And then also interesting too, and you don't hear too many people talking about this. They sure were talking a heck of a lot about the Stormy Daniels and the payoff lawsuit and stuff. But Trump's actually on trial now for rape. Woo-wee, that's a big one. So don't hear too many people talking about that. But wow, that's quite a jaw dropper. And I think probably one of if we're talking to the American audience, the big news out is, and I don't quite understand it. I did see people posting in the lounge quite a bit about this, but if I understand correctly, Mr. Biden plans to penalize people with good credit scores. And if you go and take out a loan and you have a good credit score, you actually pay a higher monthly rate. I mean, this makes no sense. It's almost like they're intentionally trying to destroy wealth of the citizens within the country. And the problem with this is if these laws do become apparent, people are going to go and abuse that, and they're going to run up really bad credit scores and all that. And that does it bankrupt the United States when all of this shit hits the fan? So I was quite surprised at that. That's an interesting news pit. Yeah, somebody posted this in the lounge, and I don't know what the source is here, but it just surprised me. Home buyers with good credit to pay higher mortgage rates. Baffling. And if anything, what I've said to people, and actually, I will say, I saw a guy say cash only sale, 265,000 US for a 10-acre farm, kind of with, I think about 2,000 square foot place that actually looked pretty reasonable. It was off grid in Utah. And I was just like, gee whiz, that's awfully attractive. So I do like the idea of paying for assets and buying assets outright. I'm not a fan of buying anything through mortgages or debt or anything like that. And it's interesting how the system would like you, of course, to be up to your eyeballs in debt, and of course have terrible credit scores, so they can charge you really high interest rates and all that kind of fun stuff, penalties and everything. But if you can actually buy assets outright, I actually think this is a really good time to be a buyer of assets. And it would make sense that, they want you to go through the debt route, like the 1%. So anyway, that news article kind of caught my attention. I thought that was a bit of a surprise. So that's sort of your news for Monday morning. Econs, we had PMIs come out down in the States here this morning. 47.1 still technically implies economy is contracting, reading below 50. I suppose what we really want to see is what's the trend. This is it's kind of like almost in a weird sort of way. We were talking about Bitcoin's V-top there a year or two ago. Same sort of thing. That looks like a V-top to me. I suppose your double top came in here. And really, I've often talked to you guys about smiles within smiles. So this cute little smile over here was probably your trade if you were going to trade this thing. And look at that. I mean, just straight line down. I did read that the Fed was still on course for raising interest rates in the coming days, and I think the FOMC meeting here is it's pretty darn soon. Like I said, we got Charlie inaugurated on the 5th, and that's the eclipse, if I'm not mistaken, and the Fed, of course, is going to come out and poop on all of us tomorrow and Wednesday. And on Wednesday, if you like it, it's kind of a fun thing we do. On Fed days, we load up a video, we put on a matrix of all the major markets, and we watch the fireworks through the Fed announcement, and then the hour following the Fed announcement, and then we get sort of an idea of what to expect going forward. You never know. I mean, you might find that if the Fed does indeed raise rates, and then they come out in their statement and they say, we think we're done. All the Fed governors say, feel like we're now with the rate, if it's like 5.25 or whatever, we're above all inflation rates. So we've basically done what we've needed to do with regard to rates. And now we're probably going to pause. You might find that the market actually rallies on the other side of that. So it's really tough to tell. Can anybody really predict the future? No. So we'll see how that goes. But this should be a very interesting week. And how ironic it finishes with Charlie's inauguration. And it would be kind of funny if he was like whacked through his inauguration stuff. I was reading an article, ironically enough, and this is kind of just fun fact, that kind of thing. It turns out his sister is actually the person who is officially in charge of his securities, which I thought was kind of interesting. So I don't know. Anyway, I thought I had it on here somewhere. But anyway, it's just a fun fact. So anyway, she has a very specific name in the whole process, and she has to follow along behind him and do certain tasks. So I don't know. And in the article I was reading, she was kind of joking about how I don't know how about security these days, but oh well. Anyway, interesting crypto market and the broader market. You know, if anything, we have one site member, and I really like his approach where he just simply says, you know, I'm not really allowed to take a trade unless I see all three of these pointing in the same direction. And I think we had one of these funny situations where Bitcoin did spit up a buy, and you know the price did jump up quite a bit, but it's been melting back down. And of course, the S&Ps, they're not really happy at all right now. And if we look at the S&P, what I'm a little bit worried about here for the ES is really for the stock market in general is we're not really in a very bullish place. Where should we look at this? Maybe I think I have this on a daily chart here. Yeah. So as you can kind of see, squiggly line theory. What is Brian thinking here? You know, I mean, the problem is from the futures markets, we're nowhere near new highs. We are brushing up against resistance levels that came in sort of the beginning of the year, middle of the year. So again, it's really a function of what the heck the Fed's going to say Tuesday, Wednesday. But is that a place where I really want to get uber bullish? I don't know. That's a tough one. I think you know, obviously, well, not obviously, but I think there is probably like a lot of relief in the market that the banking problem with this First Republic is has been isolated just to First Republic. And I did notice that the US dollar index itself, this actually looks like it is now confirming this Adam and Eve, Adam and Steve, Steve and Bob, Steve's and houseplants. I don't know what the hell you want to call it. Of course, if it was, and here's our Adam, sort of the V bottom. If it was the classic Eve pattern, then it would be like J-Lo booty bottom, and you can see the W here. I think that's pretty straightforward. We got a trade up through this level here, and away she goes. You can see how close it is. I would say that's a foregone conclusion. I'd be really surprised if that didn't break out. Maybe we call this Adam and Steve, right? Because actually this looks like a triple bottom kind of head and shoulders pattern here. And Steve, of course, has a little bit of a package in his booty bottom. I don't, you know, that's, you know, semantics, kind of having fun here with you. I think on balance, though, I do like the idea of the US dollar moving higher here. That does resonate well with me. And how ironic, I went and converted all my US dollars in my disposable account to go and pay my tax bill. So if anything, it makes sense. Now I've gotten rid of all my US dollars. US dollar's going to rally. Murphy's Law. Anyway, so the point of the matter here is this is looking very uppy, and it's just on the cusp. And really, it's a function of what the heck the Fed does here Tuesday, Wednesday. And this could be, you know, we could look back. My hunch is we look back, and this is going to be some sort of significant historical pivot. And if you kind of think that you know, sell in May and walk away. Well, we're technically now into May now, so there's no excuses. And of course, you know, Brian's birthday, market usually is not very happy into that. Mother's Day is also coming up here too. So, you know, I don't know whether that has any historical relevance, but, you know, I can see that if we were going to have a correction through May, June, I got an itchy back. You know, you should actually expect to see the US dollar index rally. So if anything, that image makes sense. And if you are expecting a stock market top. Also, too, I get the impression that a lot of people in the marketplace were kind of like, oh, what's this, you know, the First Republic or whatever it is, that bank. Is it going to start creating some sort of cascading, you know, domino effect across the market? And then, of course, how does this sort of nationalization of the bank actually play out? Is it dilutive? Does the Fed have to go and print a whole bunch of new money? Blah, 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 blah. And of course, that was, you know, that's obviously inflationary talk. And I think over the past few days, probably, I don't know where the best place to show you this is, But I get the impression that the gold market was sort of perking up on that sort of, oh boy, here we go, another big inflationary push in our society. I don't think that this conversation is done by a long shot, and I wouldn't be surprised if over the next few years, especially with the size of the deficits and basically, Klaus's great reset and how we're just basically going to add a zero onto the end of all the prices of everything in our society. And now he has the audacity to actually penalize people for having good credit. Imagine that. I mean, that's ridiculous. God, this world. Anyway, I get the impression that the gold market's sort of like, okay, well, whoops, isn't that interesting? I guess because I moved my hand there. But I get the impression that the gold market is kind of on pause here. And actually, we are technically on a moving average basis. We are actually getting some bearish messaging here from the market, which is interesting. Also, too, the unleaded gasoline trade. Actually, it'd be just interesting to see how they did through the year. And remember, this is your, we buy unleaded gasoline the middle of February, sell it the middle of May. You made money 9 out of the past 10 years. So let's see how they did. There is February, middle of February. It's not that much of a profitable year, I'll tell you that much, bike crackers. But I suppose, up is up is up. And interestingly enough, we would have bought call options through this, and the calls with this kind of price action, I'm sure the calls, the premiums are very, very low right now. So anyway, it is what it is. But I wouldn't be surprised if that, and actually this is probably an interesting tell on the summer driving season, and what the typical consumer down in the States is thinking. My hunch is a lot of summer vacations. We're just gonna stay home this year, Billy. No trips to Disneyland this year. Maybe in the future years we'll do trips to Wally World, but I got a funny feeling this year, especially just looking at the demand for gasoline, it like peaked there in April, and we've just been going straight down here into May. I wouldn't be surprised if there's some sort of counter trend rally here. Sell buy the middle of February, sell the middle of May. It could be somewhere in here. But I could absolutely guarantee you, I used to have this one sales manager guy. His name was Carlton, and he was from Florida, and how clueless he is about Canada. They opened up a brokerage operation in Canada to try and take advantage of the silly gullible Canadians, the classic commodity cycle trade. And he came over the border with a Magnum 45 in his trunk. Yeah, Chris's eyes just went, what? And he was like, I can't bring my gun into Canada? Like, what the hell? He honestly didn't even think twice about it. And the border guard's like, yeah, I don't think that's going to fly, sir. Please go over there and we will impound your firearm. And he was all pissed off. It was like, this is ridiculous. But anyway, it just goes to show you, typical commodities broker carries heat down in the States because, and it's interesting. I'm obsessed about, of course, people potentially suing and stuff like that. So I go out of my way to make sure we never make any promises. I go out of my way to make sure we don't tell you what to buy and sell. It's your money, what you do with it, because I know that when in the typical brokerage game, and especially, cryptocurrency, the way the YouTube shillers go on here, oh, goodness. There's probably a lot of people who are going to lose a lot of money, and they're going to be very angry, and oh boy, Anyway, slow and steady wins the race. As I said, TRI never makes any promises about performance of assets in the market. Anyway, we don't need to go down that road. Okay, so the point of the matter here is commodities pretty weak right out of the gate. Stocks, like I said, I think it almost feels like it was like a phew sigh of relief in the marketplace. Suppose if we look at something like the Dow, it's trying to push higher through these highs. Maybe, Larry Williams, he's been actually pretty bullish of stocks, and through 23, he thinks the market's going to do relatively well. I'm just a little leery that we're kind of walking into a trap here, heading into that FOMC event Tuesday, Wednesday. They always say buy the rumor, sell the news. And I suppose if we go back to our ES chart, you notice that we are just coming up against these highs. And actually, I hate to say it, but there was a pretty good example of us coming up against highs in something like Bitcoin here this weekend. I don't really talk too much in the public about these lower time frame charts. But it was interesting through the weekend. I actually worked a couple orders up in 78.6s. And I really wanted to just get a short on against these M tops up here. And it turns out that that rally that we saw midday yesterday was a rally basically right into resistance. And then they went in and put another M in and then dumped back down. So that kind of image, I'm not saying that this is what's going to happen in the stock market, but you can see it looks awfully similar. So the fact that we have the Fed coming up here shortly, by the rumor, I'm worried about what does this market look like on the other side of this event. So just be forewarned. Maybe if we're lucky, everything's hunky-dory, we just continue climbing the wall of worry. But considering the way that this US dollar looks right here, that to me looks like the market's getting ready for some sort of major US dollar rally implies actually risk asset weakness. That's a little bit concerning there. So anyway, so what did we talk about? We talked today about the news, First Republic, Charlie, funny Biden policy statements about credit scores. We talked a little bit about Econs. Wasn't too much on the Econ docket today. Like I said, a little PMI number, but basically the PMI basically illustrating what we've been sort of thinking about recently. Just economy is contracting like crazy. We're below 50, which means that technically the economy is contracting. This is a purchasing managers index. So this basically is like almost think of this as like a wholesale versus retail, which is you and I, the consumers. But the wholesale, the business environment's not very happy. The problem, of course, and we've talked lots about this, is that we've got this sort of securitization of the housing industry. And I actually read somewhere recently that the most preferred asset to invest in this world right now is the US single family home market. So pension funds from around the world are parking their money in US houses. So how can Joe Sixpack, who's thinking about, and to default, Vancouver is like a luxury market. And I would sort of, mix together the Canadian real estate market and the U.S. real estate market. Canada is basically like 1/10 the size of the U.S. market. And so that is the most preferred asset for international fund managers and stuff to own. So with that kind of backdrop, it doesn't surprise me that housing prices and that stickiness of housing inflation is here to stay. And what does it take by the Fed? Are they going to destroy their internal U.S. economy to try and break that demand by the international pension fund, hedge fund community for U.S. houses? I don't know. I don't even know if they can. It's probably beyond their grasp, and they will break the U.S. economy first. So anyway, lots of anecdotes that the U.S. economy itself is still reeling here. But at the same time, too, I am reading that the Fed and the people in the know are still expecting the Fed to raise rates this coming Wednesday. So I always like to just check in. What time is it? Yeah, we've actually done a half an hour, so I think that's probably good for the public broadcast. In the after hours, after party broadcast, maybe we'll take a look at what those money market rates look like to see whether the euro dollar market is happier at all now, which gives us a clue as to what the Fed has to do going forward and Fed funds. What was it? The Fed spread, we like calling it. And then maybe we'll take a good look at what the Bitcoin chart looks like and what those lower time frame setups are looking like. I have to say, I'm actually pleased. This was, it's always, just finish off with, these are always the hardest trades to take, especially when the damn market's just ripping higher here. I happen to have open orders working, so the orders just get filled at the levels, and you just live with the results. And while we were doing the broiler chicken show yesterday, it was market was humming it on, and then it started to break, and I was like, okay, phew, looks like that was a half decent trade. So I actually took half of the trade off, and I've just got the other half still working. I have no idea where the hell this is going, but I will say that as soon as we start seeing things like bullish divergences and W's in price, well, considering we are back down into reload zones, I might just flip out of this short and off these lower time frames and get back on the long side. As well, too, the TRI algo itself is actually still long through this, so it'll be interesting to see when the algo updates tonight whether that is flipped back over bearish. It's tough to say. I wouldn't recommend anybody just trade off of this algo right now. It's still very much in beta. I think it is very helpful, and I think the information that we impart, especially this concept of 5s and 6s on our weekly commodity trend survey, I think this is just absolute gold. And if anything, my message recently has been, I don't think that this is a good shorting opportunity. And if anything, what I think is pullbacks are buying opportunities. So that's the way I'm approaching this. I just think that price got maybe a little ahead of itself. And of course, the lower time frame traders, the day traders, all those people that can manage their emotions and anxiety off the lower time frames, well, as you just saw there was a half decent short there yesterday and through the weekend. So okay, I think I'll leave the public broadcast at that. We'll pop on over and have a nice chat with the community and the after party. As well, too, there were a couple names for me to look at. So we'll do a little bit of chart review and talk a little bit with the community about ideas going forward. Slow and steady wins the race. Don't chase. Understand May and June, right? I actually fully expect this market to probably bottom somewhere around the second to third week of June. That's usually seasonally when the bottoms come in. But, who knows what the hell's going to happen. Maybe we first go up and then we come back down. The market will do any old damn thing it wants. Put your opinions away. Opinions really are worthless. Trade your setups. Your setups are priceless. Everybody give some good karmic wishes to Grim out there. He's going through a bit of a tough time right now. I did have a quick chat with him yesterday, and he's feeling a little bit better about things, but nonetheless going through a bit of a tough time. And I think, frankly speaking, all of us are going through a tough time right now. So be kind to yourself and be kind to your neighbor. Don't make any big bets right now, please. And of course, pay your taxes. Make sure that the 1% doesn't have an excuse to come in and ruin your life, because they are looking for excuses to ruin people's lives here. So unfortunately, this is probably a good time where they always say, sometimes the best offense is a good defense. And that's probably the way that I'd look at the world right now. So PMA for the win. Let's all try and stay positive. Let's try and help each other out. Slow and steady wins the race. The only thing left for Brian to say to you today is bye for now.